Hello and welcome to the business edition of PM Express. My name is Philip Nanfuri, and on tonight's conversation we'll be exploring the pensions industry. Of course, this comes on the back of the Ghana Amalgamated Trust, where we are going to see some pension funds give money to this trust, and the trust in turn will channel these funds to a number of banks. Banking in Ghana has come a very long way. From the first bank that came in 1896, that's what we have as stand chart today. It was first called the Bank of British West Africa. We've seen that over the course of history, banks in Ghana were, prior to the introduction of government-owned banks or state-owned banks, banks in Ghana were purely owned by the British. Then we saw a change in shareholding where government had some stakes in banks. Then we saw the private sector also coming on board somewhere in the late 90s, where we saw, in the early 90s, I beg your pardon, where we saw EcoBank, Cow Bank, and a number of banks come on board. The shareholding structure of banks has changed. Now you find that there are a multiplicity of shareholders in banks. For example, SNIT, the Social Security and National Insurance Trust, the Public Pension Fund, is a shareholder of some of the banks in Ghana. We have individuals whatsoever. We normally categorize them into institutional investors and retail investors. Now, the subject of tonight's conversation is pension funds. Is it a source for growth or a source for peril? What's the fuss about? Why should we put money that we contribute for future use into banks now? It's being done already. It's being done all over the globe. So tonight we want to explore exactly why and how our funds are being used. We're going to get some education on the use of pension funds in Ghana, what pertains here, and we'll look at some examples globally. But before we jump into that, let's look at the pensions industry in total. We have this infograph here, and you see right on top, we have the NPRA. That's the National Pensions Regulatory Authority. Of course, this is the body in charge of pension funds in the country. When it comes to anything got to do with the pensions industry, the National Pensions Regulatory Authority has the mandate. And of course, they are guided by the National Pensions Act, which was passed in 2008 and was revised again in the subsequent years, around 2010, 2012, thereabout. Then we have the Social Security and National Insurance Trust. We're all familiar with SNIT. Once upon a time, SNIT was the one handling all the pension contributions in the country. Obviously, the pensions sector was reformed, where we had the introduction of the Tier 1, Tier 2, Tier 3. So Tier 1 handled by SNIT, then Tier 2 handled by private players, what we call corporate trustees. Now, these two players give the funds to what we call fund managers. They actually do the investing of the funds. And if I'm wrong with this explanation, my guest will correct me in the course of the program. But these two, the trustees, corporate trustees, they're the private players, and we have SNIT, the public player, channel funds to fund managers for them to actually invest and earn some returns for you and I, so that in the future we can fall back on something. Then the custodians are normally banks that hold these funds for us. So you can see that from this, the sector is linked. We have custodians here. This is pensions, all right, but we have banks playing a role as custodians of this, and we have a number of fund managers who actually do the investing. Now, we were learning that the Ghana Amalgamated Trust was going to see a number of banks come on board and receive what we call equity investments. And we're learning that it's pension funds, loans given to the Ghana Amalgamated Trust, and then it's going to be given to the banks as equity investments. So you would realize that as time goes on, we may see some changes in the shareholding structure of some of these banks. And just to reiterate, these banks are as follows. We have Universal Merchant Bank, one of the banks benefiting from GATT. We have Prudential Bank Limited. We have National Investment Bank, that's NIB. We have ADB, that's Agricultural Development Bank. Then we have the Omnibank Sahel Sahara Bank merger. These are the 1, 2, 3, 4, and this is the fifth one, a merger of two entities. 5 banks going to benefit from the Ghana Amalgamated Trust. We're hearing that this is about 2 billion going to them, more or less, with some banks getting about 280 million. Of course, we don't have all the full details of the Ghana Amalgamated Trust's operations from the Ministry of Finance or the GATT itself. We'll play a video from the Deputy Governor of the Bank of Ghana, Madam Elsie Awaji, on what exactly she said with regards to this Ghana Amalgamated Trust. Then when the conversation picks up, we're going to find out what's the size of the pensions industry in Ghana. How much are we sitting on? What's that 2 billion worth? And is it prudent to invest in banks? Because already I said SNIT has investments in some of the equities as in stocks on the Ghana Stock Exchange. So it's all well and good. But we'll explore this and we'll learn more about our pensions industry. But first, we'll hear from the Deputy Governor of the Bank of Ghana, Madam Elsie Awaji.
Daniel, I think this is a question that is probably best addressed to the managers of GAT and the Ministry of Finance that has helped to put it together. As far as we're concerned, we know that there's a group of pension funds, local pension funds, that have put money together. We have verified that there are commitments to these banks. We have verified that there's money available and earmarked for these banks that's unencumbered. And that is part of the capital verification process that we undertook. But the details of it, because it is GAT that is actually investing in these banks, and that's what our interest was. We needed to understand who was behind GAT, and we were satisfied that these are persons that we're happy to have as shareholders of GAT, or as investors in GAT, that through which banks would benefit.
So who is behind GAT? Who has satisfied you?
I think you should talk to GAT and the Ministry of Finance about it.
I'm asking you.
Local pension funds. I think that that's as far as I can tell you. Local pension funds. We have checked with the NPRA. That's the regulator. These are all in good standing. They exist. They are not fly-by-night funds. They exist. The regulator has held them to be in good standing, and that's all I can say for now.
Okay. The question goes unanswered, but we have to go on.
Well, Daniel, let's address that. I don't want to leave here with any unanswered questions in your mind.
The question is, which pension funds are they? Can you name them for us?
There are a number of pension funds behind it. I think that we would not leave here today if I was going to mention all of them. So I think the point.
How many?
The point I've made is that we can get all these details from GAT, and I think we should let that happen.
Okay. I'm going to look at the fourth point that has been mentioned in the recent statements talking about the details of GAT. Now, GAT has committed funds from pension funds, as you see, pension funds which are a number and we are unable to name.
Absolutely.
Yes.
Well, there's a lot of them, so I think ideally you should talk to GAT for a list which you can publish to your listeners if you want.
I'm only curious because you told us just a few minutes ago that you are satisfied with the persons behind GAT.
Absolutely.
According to the managers of GAT, according to the Ministry of Finance statement, GAT is local investors and pension funds. And we are unable to find out now what the number is. You're unable to tell us what the number is or who these pension funds are. That's just the curiosity, because we have vetted these pension funds.
The investor in these banks is GAT.
So you vetted GAT?
We vetted GAT, and we verified that GAT has these investments from these funds. And we have checked that these funds exist and are in good standing.
So you're welcome back. And that was the second Deputy Governor of the Bank of Ghana, Madam Elsie Awaji, in interaction with Daniel Dazi, host of the Super Morning Show, just a day or so ago. Now, the issue here is, should our pension funds be used as investments in banks? Some describe these banks as ailing banks. Some describe these banks as weak banks. Bank of Ghana says no. These banks are well run, but are not well capitalized or are not solvent enough, if I can put it that way. So that's why there is the need for GAT. Now we're learning again that GAT is taking these funds from pension funds, private pension funds, and going to channel these as equity investments. So GAT here is the player putting money into these 5 banks that we discussed. Like I said earlier on, the pensions industry is made up of the National Pensions Regulatory Authority. That's the head. Then we have the Tier 1, public pension player. That's the Social Security and National Insurance Trust. Then we have the private ones, that's the corporate trustees. Then we have the fund managers. Then we have the custodians. So this sector is regulated. Over the course of global development, if you look at other economies, and I'll come to that in some part of the show, you see that pension funds drive their economies. They rely on these for growth. Just to buttress this, post the 2008 financial crisis, we saw a lot of people lost their homes, lost their incomes, and lost their pensions. Why? pension funds offer what we call long-term liabilities. I'm a young man right now. If I contribute to a pension fund through my contributions, I'm not going to access these funds, all things being equal, till I'm 60 plus. In other jurisdictions, even 65. So it gives people a wide range of funds to invest in different parts of the economy. What we see in our part of the world is that our pension industry is now growing. As of 2008, or prior to 2008, SNIT was managing all these. Then we had the reform, and then private players came on board. So pension funds offer a lot of money, if I can put it in very simple terms, for development. So if banks are going to get a chunk of this, what's wrong with that? One may ask. Are these banks going to use this to turn around their operations and grow? So that's just a snapshot of the essence of our conversation. They provide room for a lot of growth. At the same time, if not managed properly, they become perilous, hence source of growth or peril. But we've seen that in the recent days, the debate has been about the concern about the use of these funds. We're going to hear from Angel Kabunu. He's the president of NAGRAT, as to exactly what he feels about this use of our pension funds. Let's listen to him.
We speak. There is no document that has been presented to the workers that we can peruse as the basis for discussion that the pension funds are going to be taken to Ghana Amalgamated Trust. There are rules and regulations as to how pension funds are supposed to be dispensed with. And we do not have any arrangement with any organization called Ghana Amalgamated Trust, nor do we have any document, official document from government, that the unions or the various trusts will study to agree or disagree. So the impression that is being created in the public domain, as if a decision is being taken, is absolutely very, very erroneous. Secondly, how do we put people's future and pension money in the hand of an organization that is now going to be formed? An amalgamation of failed institutions brought together, institutions that we have even lodged our money with. Some of these institutions we have invested our monies with, and they are not even able to account for the monies that we have invested with them. They've not been able to prove to us that they've been able to prudently manage these accounts. How do we bring these organizations together to come and handle our pension funds, give them more money?
So that was Angel Kabunu, the president of NAGRAT. So you see there are a lot of reactions as to how exactly these pension funds should be used or should not be used. So I'm going to introduce my guest, and we're going to get the conversation running. My first guest is Samuel Waterberg. He's the CEO of People's Pensions Trust. Samuel, thank you very much for joining us on PM Express.
Thank you very much, Philip, for having me.
And we have Mr. Andrews Aglobli. He's also a pensions expert.
Yes.
Andrews, thank you very much for joining us
here
on
pleasure.
PM Express.
It's a pleasure.
So I'm going to start off with you, Mr. Waterberg. Can you give us a snapshot of what the pensions industry looks like in Ghana today with regards to the numbers? What's the size? I ask because of the amount we are learning is going to be used to help just 5 banks, 2 billion. What's the size of the pensions industry in Ghana today?
So if you take all the corporate trustees and the individual trustees together, approximately we are talking about 12 billion Ghana cedis. 12
billion Ghana cedis.
Exactly. That is for the private trustees.
Private trustees.
Yes.
So we haven't added SNIT, which
you
is
haven't added SNIT to it. I think if you add SNIT to it, you'll be talking about 21 billion, 22 billion Ghana cedis.
For where we are as an industry today, since the pensions industry was reformed in 2008, is that a good number for where we are today? 8 years down the line, or 10 years down the line, I beg your pardon. Is that a good number?
Definitely. If you look at 8 years ago, 0 when it comes to private trustees. There was only SNIT. And currently, if you look at the size of SNIT, is approximately 10 billion. And within the 8 years, all the private trustees together have been able to raise 12 billion. So I think the number is good. If you look at even the growth rate, every year we are growing with 20%. So I think it's a success story, the pension industry in Ghana.
Mr. Andrews, over 20 billion in assets.
Sure.
I believe you call it assets under management, AUM.
Yes, assets under management.
Over 20 billion of it.
Yeah.
where do we put these funds? Because where I sit, I would see that a lot of money will go to, from a layman's perspective, treasury bills, government securities. That's where I would see. Give us a snapshot of where we can put pension funds within the Ghanaian context, and where can we make the most return so that come 40, 50 years, I have something to fall back on.
In Ghana, the pension industry, we call it a regulated industry. So things are done based on guidelines and laws and the rules that are issued by the regulator. So when it comes to investment of pension funds, we have guidelines that are issued by MPRA, which is the regulator, and these guidelines are actually the framework through which the trustees design what we call investment policy management. From there, based on the guidelines MPRA has given. So under the MPRA guidelines, there are about 7 to 8 asset classes that you can, put these pension funds into. Some of the asset classes include putting money in government of Ghana bonds, putting money in corporate bonds, putting money in banking fixed deposits, putting money in equities, putting money in collective investment schemes. So this range of asset classes that has been, how would I say, gazetted by MPRA through their guidelines are, investment policies, statement that the trustees use, and they have given those statements to fund managers. So fund managers are to look at this sort of framework that has been designed from the MPRA through the trustees. Then they have to look at it and make recommendation of any asset that they come, looking at these sort of, how will I say, instrument that they have been given, so that the trustees will make those investment decisions anytime, there is that funds available to be made. So there are clear guidelines as to how investments are done when it comes to pensions.
Let me just ask a follow-up question on this. So can pension funds be invested in banks within the country?
As at 2017, based on MPRA report, you will see that about 60% of the pension funds were in government of Ghana.
That's treasury bills,
treasury bills,
etc.
Yes. However, 23% were in banks in the form of fixed deposits, because we were already investing in banks. That is money market instruments. So if you know investment, money market and capital market. And money market is an, investment avenue that you can put pension funds in. So based on the return that they were giving years past, most of the investments were going into some of these, instruments issued by banks. But with the changing in the investment climate, I'm sure 2018, I would say that maybe the MPRA report may come. We may not see 23% again. Probably it may go further down because of the change in investment climate due to the collapse of banks and all that. So most of the pension funds are shying away, from investing in banking assets, going into government of Ghana. For example, you are going to a safe asset class where you can.
Yes. So our market is dominated by an investment in government securities.
Sure. That's what we are doing.
Mr. Waterberg, is that subtle practice across the world?
No, it's not across the world, but I think in Ghana, it makes sense to invest more of your assets in government securities, because at the end of the day, what you look out for is return and risk. And if you look at government securities, the risk are mitigated, it's minimum, and returns over the previous years were fairly good. So why will a pension fund take extra risk to invest in corporate bonds whilst you can get a good return with government securities? So that was one of it. But also, secondly, as my colleague said, the investment assets are regulated by MPRA. So when it comes to corporate bonds, we can do maximum 30%. When it comes to equity, we can do maximum 10%. So if
10% of the funds that you hold?
10% of the funds that we hold. So if you look at all the asset classes, likely majority of your assets will be invested in the government. And it also makes sense. Of course, government needs money to develop the nation. So if they can get money from the pension funds, why not?
But let me just push this here. One would argue that, giving money to government is safe, arguably. But why don't you channel these funds to other sectors of the economy where we can see quicker growth. Because if you're channeling to government, we've seen, even today we did a story on the issuance calendar. Majority of the debt is going to roll over maturities, with a bit going to finance government needs. And we see that the financing of government needs, there's a preponderance of recurrent expenditure. So shouldn't pension funds and shouldn't policymakers as a whole look at how they can push these monies without the necessary risk into other areas of the economy that will grow?
So let me speak from the pension perspective. So we as corporate trustee, what we look for is the interest of our contributors. So people give their money to us in trust, and they hope that when they go on retirement in 20, 30 years, we are able to pay their benefits. So pension funds is not money that you want to play with and you want to take a lot of risk with. So as a corporate trustee, you look at the return, but at the end of the day, you're also looking at the security. And if you look at the terrain, the various investments opportunity in Ghana, and the returns that you can make out of it, I think it makes a lot of sense to invest in government securities. Besides that, we also do, as my colleagues said, we do a lot in fixed deposit to banks. We have been supporting the banks. Previous months, MPRA introduced investing in private equity, so that indeed we can also support the upcoming companies. So these are something that you do. Of course, private equity, the risk is of course higher than what you will get from a government security. So you're always looking at the pros and cons. Where should you put your money to? What are the returns that you can expect, and what are the risks?
Okay. You made mention of the investment guidelines. You were giving certain allocations. You said a certain percentage to equities. I'm interested in equities because of this Ghana Amalgamated Trust issue.
Right.
So it will mean that the pension funds that are giving the money to GAT, like we said, it's more or less like a loan to a bond to GAT. So GAT becomes the equity investor.
Exactly.
So GAT will not be bound by the investment guidelines of MPRA.
No, so
Okay. Let me just add this quickly. You know, when it comes to equities, equities simply give the ownership right to the one who, you know, make those investments. Now, with the MPRA report again 2017, only 1%. Imagine I'm saying 61% going to government, and only 1% out of, as at 2017, we are saying 11 billion was private pensions. If you add SNIT, it's over 20 billion. And 2018, we are expecting that it to be around 22, 23, or 25 billion. Right, so if you look at this huge money, and only 1% is going to equities. And why? One of the reasons is that some of the equity, before you can invest the pension fund in equity now, they should be listed equities. They should be listed companies.
So
if they are not listed ones,
yes. If they are not listed,
yes,
you can't invest.
No, you can't invest
in regards to equity.
Exactly.
Yes, but that is why this gas issue we are discussing. The pension funds, when these bonds are issued, for example, by GAT, who is this private company that has been set up,
the special purpose vehicle,
the special purpose vehicle to issue bonds. Now, pension funds going to buy these bonds with the money which is investment, they are holding these bonds, and these bonds anyway will be guaranteed by what? Will be guaranteed by government. And we've done that before. If you look at an example called ESLA, we did that in 2017, a lot of money from pension fund, because to be frank with you, government is even paying higher interest rate compared to going into the banks or even private sector. If you look at,
so it makes more economic sense to put your money with government.
Yes, because if I can get 21%, you know, from having a 5-year or 10-year bond with government, why will I go, and 21%, I mean that 21% every year for 10 years. Why will you go to maybe a private sector and then get fixed deposit, for example, maybe 18%, 17%? Okay, so like my colleague would have said also, you know, as much as we are looking for safety, you're also looking for returns, because don't forget, it's people's money that you have to yield some returns so that they can grow and guarantee, have some money that they can use during their retirement. So definitely return is a part of it, as well as safety you are looking at. So when it comes to equity, it's quite dicey. And looking at our equity market in Ghana, we still have a long way to go for its development.
Mr. Waterberg, you wanted to make an intervention before?
Yes. So I think two things. When it comes to what GAT is doing, they are giving out a bond. And we, as pension funds, we can invest up to 30% of our assets in bonds. So this is an instrument that we can invest into it. Of course, when you are investing in a bond, you want to know who is the one issuing the bond and who is the one going to receive the money. So at the end of the day, I think all the pension funds, before they will even invest in the bond, they will analyze all these 5 banks to make sure that are they solvent and are they able to pay back the money that they have received. So
Bank of Ghana says the banks are solvent and well run.
That is what Bank of Ghana is saying, and definitely I believe in them, but we as a corporate trustee,
you have to do your own valuations
we'll do our own valuation, we'll do our own checks before we will invest money into it.
I want to ask both of you a question. I'll start with Mr. Waterberg. Yeah. 2 billion is what we are learning.
Yes.
Whole industry is 21 billion. Let me do some quick maths. 2 over 100 times 21, percentage terms. Do you think we can find this 2 billion in the market right now, looking at the NPRA's investment guidelines or restrictions, if we can call it? Can we find this 2 billion in the market? Mr. Waterberg.
Okay. So if you look at the assets of the pension, the private pension trust, which is 11 to 12 billion, and out of the 30% can be invested in bonds. So then you're talking about between 3.5 billion. So that 3.5 billion indeed, of course, will meet the 2 billion. But the assets have already been invested. So it means that if we want to raise the 2 billion, it's new inflows that will come in, or we have to de-invest some of our assets that we have. And my concern that I have is because I read that they wanted to raise this 2 billion in March 2019, which I think will be difficult to raise new flow of pension contribution before March 2019.
Mr. Andrews,
yeah.
Do you think we can get 2 billion in this market?
That is where I also have a bit concern about the funds involved. Because don't forget, last year, MTN tried to raise, 3.5 billion. What they got? 1.1 or 1.2 billion. Yeah. That's what they got from the market. But don't forget, maybe that is equity. So, but the other side, depending on how this bond is issued, for example, if we open it up to invite international, if it's treated as not only to the local market, then I think we can get that 2 billion, because most people, for example, what is being said, probably what people we are gathering, for example, will be, for example, a 5-year bond, which will be giving around 21%. If you compare going to invest in America, where you get about for a 10-year, you are getting 2-point-something%. Yeah. And if you come to Ghana, you are going to get 21%, and you have a government guaranteeing that. Though you compare the exchange rate, differentials. Definitely, it's worth considering. But like I said, depending on how the bond is finally structured and who will invest it, if the national will come in, then I think that 2 billion can be raised.
So let me add one more thing. I don't know if the government have said that they are going to guarantee the bond. We should make that distinction clear. Okay. Because of course, if the government comes out and say that they will guarantee the bond, then likely people will invest, because then there is no risk. Because at the end of the day, if the GAT is not able to pay, the government will come and bail it out. But I think for now, the government hasn't come out to say that they will guarantee. So it means that now if anyone that invests in the GAT, and these 5 banks are not able to indeed to make enough returns and to pay back, then the risk, of course, will lie on the pension fund. So I think that is
let me add quickly, because of the ESLA that we are currently holding. Most of pension funds are holding ESLA. We bought 7-year ESLA for 19%, 10-year for 19.5%. Exactly. Now in the secondary trade, which are being traded on the Ghana Stock Exchange, ESLA now, most, if you want to get a 10-year and all that, it's around 20-21%. Yes. Because it's a trading. And this instrument that is likely to be issued is expected to be traded on a Ghana Stock Exchange. Yeah. So as you trade it and you go ahead, and even ESLA was also guaranteed. Yeah. ESLA was designed, it's a special purpose, if you remember, for the energy sector debt, right? Which most people bought into it and all that. So if this one is being designed for banking sector situations, I think this is not new. We've done it before, right? So once the returns are there and the guarantees are there, I think pension funds, you are looking for places to put the money.
And this all goes back to the details that should come from GAT and or Ministry of Finance to allay the fears of contributors, because I think that's the key concern, that if you put it in these banks and it doesn't go well, then we have a problem. Gentlemen, hold your thoughts for me. We'll take a quick break now. This is PM Express Business Edition. My name is Philip Nanfuri. My guest, Samuel Waterberg, CEO, People's Pensions Trust, and Mr. Andrews Aglobi. He's a pensions expert. We'll be right back. Welcome back from the break. This is PM Express Business Edition. My name is Philip Nanfuri. Just before we went on the break, we were learning a lot about the pensions industry. Key things here. The industry as a whole is made up of private players and public players. Now we have 11 billion in assets under management for the private pension funds from my guests here. And we have about 10 billion coming from SNIT. So SNIT manages about 10 billion worth of assets. So contributions, what is invested in totality. Then the private pension funds also, since 2008, has come a long way, 10 years or even, let me say, 11 years down the line. And they have about 11 billion in assets under management. But we see a preponderance of investments in government securities and less of it in other places where it's going to rapidly develop the economy. My guests were telling me off the record that our market is constrained in terms of where we can put investments. That's why you see a lot of them channeling funds into government securities. We're also learning that from their opinion as players in the industry, it will be quite tough, in inverted commas, to raise this 2 billion that we're learning is going to go to the Ghana Amalgamated Trust, which in turn is going to go into these 5 banks. Now, I'm going to raise something I read on SNIT's website, and I want to see and hear what my guests think about it. Now, I'm going to read it to you. As of June 2018, SNIT's investments in equities, that's stocks, shares on the stock exchange, was 2.7 billion Ghana cedis. Thus, they had investments in 22 out of the 37 listed equities, and their total was 2.7 billion. I want to find out, juxtaposing this to just 2 billion in 5 banks, can you call that a smart investment or not? Or we can't even juxtapose the two of them at all. It's apples to oranges. Mr. Waterberg, 2.7 billion SNITs, 22 out of 37 equities, and 2 billion in 5 banks. Are we looking at it wrongly?
Yeah, I think it's difficult to compare. I think it's not the same because based, of course, on the amount of money that you're investing, that will also determine your stake in that business. So the 2.7 million that's invested, of course, they'll have a certain stake in it. And if you're investing 2 billion in 5 banks, of course, your stakes will be high. So it's difficult to compare. What I would say about it is that we need better particulars about the coupon rate that will be given, whether there will be a guarantee or there might not be a guarantee. We need to know the tenor. Is it 3 years? Is it 5 years? What is the expectation? And of course, we also need to look at the books of the 5 banks to make sure that indeed, would they be able to pay back the money that they are receiving?
So that's from a pensions, a trustee's perspective.
Exactly.
Yes. So if they came to you with this opportunity, these are the things that you'll be asking.
Definitely.
These are the questions that you'll be asking. Mr. Andrews. Yeah. 2.7 billion in 22 equities out of 37 and 2 billion in 5 banks. What do you make of that?
My thought in this particular issue is that, they are different entities. SNIT has been around for well over 50 years, right? So you are talking about somebody who has been around for all these years. And don't forget, SNIT, their investment guidelines is totally different from the private funds. SNIT, those times, if you remember, they were having about 100% in some of the banks. If you remember TTB, SNIT was having 100%. It means some of these investments SNIT is holding about 90%, 50%, quite huge stakes in most of these equities that they're having, so they could do that. But when you come to the private pension schemes, you have investment guidelines that is telling you that the maximum that can go into equity per your asset under management should be 20%. Now, even if 20% of your assets should go into what? Equities. Now we are saying that the guideline is limiting you again further, that you cannot put more than 5% in one equity or one listed company. Right. So you can see that the private pension funds are a bit more limited in terms of their exposure to equities compared to SNIT. That have a lot of latitudes. But don't forget, the case in point of GAT we are talking about, the private pension funds are not going to be investing in equities. We are going to buy bonds issued by this entity called GAT. Once they issue those bonds, we are dealing with GAT. But GAT will also be dealing with these 5 banks. And once GAT will be dealing with these 5 banks or 6 banks, and they have a rep on those boards, they are going to what? Have control. And for me, these banks, it's not party or party, because we say once you have people coming into your equity stake, you dilute the equity, and now the ownership structure also change. And don't forget, government is going in there holding about what? Close to 70% of those ownership. So definitely the management is going to change. A lot of things is going to change and all that. So I think that they would like to protect the interest, because once you go in and you put your reps on those boards, you surely want to protect the interest so that you can raise those money and settle the indebtedness of the bond that is issued. You see, so for me, looking at it from pensions and investment, I think that once government comes in and make guarantees, just as was done in ESLA, most people will try to hold those instruments, because you are having money, looking for a place to put the money. And if government is coming in and could give you high return and guarantees, I don't see why people or investment will not chase that funds.
I saw Mr. Waterberg nodding his head all along. I think we all need the same details from the Ministry of Finance and or the GAT. But in your submission of in explaining the investment guidelines, not to put you on the spot here,
no problem.
Do you think there should be a review? I'll start with Mr. Waterberg. A review of the investment guidelines, or it fits where our market is as a country, where we are today, our financial market. It fits it enough, or there should be a review of those guidelines?
I think when it comes to the investment guidelines, it's a dynamic document, and MPRA also review. I think the last review was a few months ago, where they brought in private equity, because they saw that there's a lot of companies coming up and they find it difficult to raise capital, so they can. Indeed, if we have listed private equity, we can invest money into it and they can give it to the company. I think they introduced the REITs, where we can do real estate investments. So the guideline is something that needs to be reviewed based on the market and what is happening. So I think it's something that the MPRA is doing. And we, as a trustee, sometimes we also, of course, want to do some investment that is not allowed. So, for example, 95% of all the investments should be done in Ghana. Sometimes we also like to look at what's happening in the region, perhaps in Nigeria and Ivory Coast.
Are you allowed to invest beyond the shores of Ghana?
5%.
Just 5% of the assets and the management?
Exactly.
Is that enough for you?
So I will plead to increase it to 15 or 25%. Not that we might push the money into it, but it gives us the opportunity to see where we can get good returns for our contributors.
Okay. I have a story here. If you can just lightly turn to the left. And it's from the San Diego Free Press. CalPERS joins investors calling on banks to address concerns about the quota access pipeline. And CalPERS is the California Public Employees Retirement System. They are one of the biggest pension funds in the world and one of the biggest in the United States of America. And I just picked something here just to throw it in for perspective. It's an excerpt from the story, and it says, CalPERS, the $309 billion retirement fund, has about $6.5 billion invested in 16 of the 17 banks as a shareholder and creditor as of December 31st, 2016, according to a statement from CalPERS itself. I see the might of the pension funds in other countries. I see that we are doing our best as a country or as an industry, let me put it that way, to get to that level where we would be strong, if I can say so. As I look at other economies, I see they've tapped into the pensions and the life insurance. We see that life insurance is a big deal out of the country. Mr. Andrews, I want to just give you this question. What do you think it will take for us to get to a point where our pensions industry is something that we can tap into to fund the multiplicity of projects we have in our country and not always go beyond the shores to look for Eurobonds?
The first point of investment, as I said earlier, is the framework, which is what we have said, that it's the guidelines that are issued from the regulatory point of view. Because those guidelines provide what we call permissible investment and prohibited. So you cannot go into dangerous grounds. I'm sure some stories have gone over the day now to mention, as we know, about things like men's group. It will be illegal to put a pension fund in that place because it's prohibited. Permissible ones are what the guidelines has given you. You can. So going for your questions, provided the guidelines, as we said already, my colleague was saying, they are dynamic and can be. The recent one was just introduced in 2017. We have had one from 2010 to 2016. And this one that we are even working on now, that's what brought even banking as a whole asset class. So as we go, and then asset class changes, for example, the new Security and Exchange law that has come in now have brought derivatives and other asset classes that we can make investment in. Yeah, nothing stops us going back again because we can always review. In other jurisdictions like UK, they do review almost every year. Every April, they'll look at the laws and update every time. So, though we've reviewed, like I said, not too long ago, it's always to look at
it's an ongoing process.
So that is what will drive the market to go through these permissible, because you cannot go where you haven't been allowed, as I said earlier. So depending on what the guidelines will dictate, money, and we look that it saves, and then you can make a good return, definitely money will chase those sort of asset classes.
So let me add on to it. I think if we want to drive our pension funds and we want to do all the investments and develop Ghana, I think what we need to do is that we need to look at the number of people that have pensions in Ghana. Less than 15% of the Ghanaian working force are saving for their pension. We know that in Ghana, more than 85% of the workers are in the informal sector without any pension scheme. What are the initiatives that we are taking to bring these people also on board? What are the incentives that the government is giving for these people to come on board? Because me and my colleague and you yourself who are working in the formal sector, whenever we save for our pension, it's tax benefit. The government pays a part of it because we don't pay tax of it. Those in the informal sector who are not paying tax, whenever they pay for their pension, it's net. And because of that, they don't want to save. So I think we need to look at how we can bring those in the informal sector. We are talking about more than 12 million people who currently are not saving. Assuming that all these 12 million people will start to save 1 Ghana cedis a day. So every day you'll be able to get 12 million. Make it 12 million times 365, then you know the number of money that you can bring on board. So I think, yes, we are focused on the formal sector, and they are doing quite well. We are growing by 20% a year, but we also need to look at the informal sector, how we can bring them on board.
If I may ask this, has your firm privately done anything to rope in some of these informal? Do you have any programs,
so
something just to...
People's Pension Trust, I think we are one of the few pension corporate trustees that are focusing on the informal sector. Okay. So all our activity, 90% of our activity is to focusing on the informal sector to bring them on board. Because we know that they are an important market for us. Currently, 12 million of these people don't have a pension. Assuming you're able to get 1 million of them, saving 1 Ghana cedis a day. So for us, these are important target group, and all our activities, all our marketing outreach is to bring these people on board.
Okay, okay. So just as we wrap up, we have just a few minutes to go. We've discussed the size of the industry. We've learned here today that pensions are important. They drive markets around the world, financial markets. They are tools for investment, but they must be used appropriately, so that in the long run, 30, 40 years down the line, when you and I retire, we can no longer work. I can no longer sit here and present. We have something to fall back on. So it's not totally wrong for pension funds to invest in a wide array of asset classes, as my guests call it. They can invest in banks, they can invest in equities, they can invest in government securities. But money should go where it's safe, because they are holding these funds, these contributions, in trust for you and I. So it's critically important that they do the right thing. So if these pension funds that are going to channel our contributions to the Ghana Amalgamated Trust undertake the proper due diligence and see that these banks are okay, then they'll put the money there. But this is just the beginning of the discussions. We still need more information from the Ministry of Finance and or the Ghana Amalgamated Trust. But I just want to bring this in. I was asking some of my friends and colleagues in the course of the day, just on the lighter note, that would they invest their funds in the banks that want to take And most of them are giving the same answer. No, no, no. Perhaps I would say it's a problem of misunderstanding, or perhaps these concerns are very genuine, and it's not up to me or anybody else to judge people's feedback. With regards to, we've done some education here today, and I'm very happy about it. With regards to education in the industry, I want to start with Mr. Andrews, because you have a more academic background as compared to Mr. Waterberg. Not to downplay it, I beg. Do you think the education in the pensions industry is enough? And what can we do to ramp it up from all levels, basic, tertiary? How do we get more people to understand what pensions are to do and the might they possess?
Thank you. I can say that looking at the industry, the understanding of pension is very, very low. Very, very low because over the years, as we developed, the pension hasn't been the forefront. It doesn't affect election results and all that. And the beneficiaries are, very small. For example, if you look at SNIT, roughly the total pensioners under SNIT are less than 200,000 of people. If you have an elderly population, close to 1.8 million, and only 200 under SNIT. And maybe if you look at those who are under Cap 30, it will be about 80. So roughly less than 300, if anything, put all together, are beneficiary of pension benefit. So you can see that quite a large chunk are not getting pension benefit. So that also will be some of the reasons why you could see that the interest or the politician will not use pension as a campaign tool, because a lot of people, the majority don't benefit or they don't see the need. But I see that as the economy change, the dynamic change, people interest, and having come with the 3-tier pension scheme, people interest are now going into pensions. And believe me, as we go further on, people interest will begin to ask more questions in the pension. Now to come to the how we go by education. All this time, the regulator like MPRA, they have been doing most of these pension sensitization program by themselves. But in 2018, they've come out that the various schemes which we made up of corporate trustees and individual trustees that are managing the employer-sponsored scheme should now come to the forefront to be doing advert on education, should be take education as Alex said, public education, try to educate their members. So if the trustees begin to educate their own members, and these members go ahead to educate their families, their households, as we say in Ghana, one person is connected to roughly about 4 within your household. If one person is educated, you can go about 4 people. I'm sure we will expand the educational base so that more people will be enlightened, because the more people are quite conscious about pension, that they have to take care of what? Their period of retirement where money will be scarce. Then you could see that what the interest there to learn more, and then even like what he said about these those in the private informal sector, they will also begin to voluntarily what? Come into the play to try to contribute towards their own retirement, because they will see that no, you are a businessman today, you have money, but come age 60, 65, you don't have that money. Who will take care of you? And that's what pension is there to answer those periods that you will be destitute, to provide you money till you die, which SNIT has been doing currently anyway. But this tier 2 and tier 3 will bring what you call a lump sum. Okay. That you get that lump sum, you can finish your house, you can build whatever, you can do so many things, and then getting that monthly one from SNIT. So it's a good opportunity for people, to invest in pension schemes.
Okay, thank you very much, Mr. Andrews. Mr. Waterberg, I'll give you the last bite.
So what I would say is that investing in a bond is not a new thing for pension funds. I think what we have said is that also for the general public, there should be more information given out, because everybody is concerned. These are funds that you have saved for your working life, and you don't want to take a risk with it. And I know that the GAT, they have done their due diligence within the 5 banks. I think they will share it with the pension funds, and I think the pension funds also needs to go out and ensure to their contributors that the investment that they are making is safe, because this is a public discussion. So I don't think that the pension funds should keep all this information for themselves, but they should also go out and say that indeed, we have seen the books of these 5 banks, and based on what we have seen, we have the confidence that if we put the 2 billion into it, they will be able to pay. And of course, if government will guarantee it, the government should also come out and say that in case that they are not able to pay, we will guarantee. And I think if that information will be given out, people will be rest assured, and people will go back to business as usual.
Okay, thank you. So my guest, CEO of People's Pensions Trust, Samuel Waterberg, and a pensions expert, Andrews Aglobli. My name is Philip Nanfuri, and this has been PM Express Business Edition, where we've discussed the pensions industry, a source of growth or peril. Have a good evening.